welcome to the stream, everyone. Get your questions ready. We're doing a live Q&A today. Everything Maven, prop firm, and trading related. Anything you need, look in the comments below. As usual, we'll be giving away a $50,000 account at the end of the stream. Be sure you have your questions ready. Share the stream along with your friends on Twitter and other social media. We'll be starting in 2 minutes. All right, guys, welcome to the stream. Today we've got Ryan and Emma with us. We're just doing a simple Q&A sort of deal today. Make sure you guys got your questions in chat. Anything to do with prop firms, trading, Maven, or if you just want to talk about your dog, send it in the chat room there. Emma down there, she is going to be monitoring the questions and popping them up on the stream. So if you got a good question there, make sure you send it. And we will start off with a little market analysis. How about? lot of controversy in the markets lately, guys. And we're looking at, let me raise my monitor there a little bit so you can see the top of me. Perfect. Okay. We're looking at the FOMC from last week causing a bullish momentum push, right? It is a difficult time where we often have seen bullish pushes coming out of a rate cut for the first few months after the rate cut, and then a massive drop down, guys. So I am not super confident in the markets. Let's look at Bitcoin for the reason being, let's look at Bitcoin here first of all. Okay. And I'm sure we want to look at something more meaningful than the 5 minute. Okay, guys. So once again, this is what we've been talking about for the past few weeks, guys. We can see that we actually closed back within these lower ranges after essentially making what looks to be a fake out, in my opinion, right? We kind of consolidate right above and then we break back in and we close back within, right? So this, in theory, is now a retest of this zone, right? Right here. It's hard for me to draw. I got a new monitor here and I'm not quite used to using it. So, and this is the level that we're actually looking for here. If that level gets broken to the upside and close beyond on the upside, then I'm perfectly happy to say, hey, I was wrong and I will be back on the bulls, right? But currently what is happening is exactly what we've been telling you is going to happen, is a pullback to the highs caused by the FOMC, and then we should be seeing some downward movement here. And hopefully for the bears, we've got a week left, so hopefully the bears can get it closed back with below, and then we can see more accumulation happening, and that's good for everyone in crypto because you can accumulate more before we actually make more money, guys. That's the crypto market in a nutshell. Let's look at something else. The NASDAQ managed to gain on the weekly level there, and so we should be retesting these all-time highs once again. Monthly candles, again, a sort of a failure. So it's a little bit iffy on the NASDAQ. The traditional markets are doing better than the crypto market for sure. Crypto market generally has more of a risk adverse sort of environment where, you might argue with me there because it's very, very profitable, but it's very, very easy when conditions are iffy that people back out of the crypto market. So it looks like the crypto market is the worst off, then the NASDAQ after that, then the S&P, and I'm sure gold is absolutely swimming, of course, right? And we can see that simply trends towards the more reserved people are with their money, the more they gravitate to metals, right? And the less they gravitate towards tech stocks and technology such as crypto, right? There's a question on gold. Perfect. Good timing, Emma. Why does the price of gold typically rise with a recession as expected? Because it is the most secure, right? You're also going to see things such as the US dollar and the Swissy tend to go up because they are more stable. People want to put their assets into a class that is going to be the least risky during a recession. And if you're holding cash, it's still it's less risky than stock market because it generally slowly deflates, right? Or inflates rather. And when you have something like gold, it is a finite physical asset, right? So there's very, very, very little risk, and it's been around for a very long time. So it's quite easy for people to think of that as a safe haven for their money. Everybody's milking gold. Yeah, gold's been doing super, super well, guys. I imagine all commodities should be doing somewhat well. When you, I guess maybe not oil, but when you are going into a recession, people want to have physical things, right? Because those are for sures. Those things will never go away, right? And there's less speculation on them. Everyone knows what gold is. Everyone knows what gold is used for. And tech stocks, much more volatile, right? Crypto, much more volatile. And people are iffy on that because also they're much more illiquid. Okay. Now... when you're going to get the peacock's view of the market. I can actually see right over here the peacock staring in the window, trying to figure out how to do a trade here today. All right, let's jump off of the charts here. And actually, no, let's go back here. I know Ryan has a completely varying opinion on crypto. So let's get your opinion on crypto, Ryan. Wait a second.
Ryan, I can see you talking, but I think you're on mute.
There we go. Okay, I thought my microphone.
I do that all the time. I'm sorry, guys.
Okay.
Yeah, I'm pretty bullish on crypto here for a variety of reasons, but I think that taking the chart out of the equation and so on, these ETFs and the flow of assets coming into them, I think is going to be a big thing, and so I think the chart, in my mind, from the way I view it, becomes a little more has a little more less meaning than it normally would. So I see crypto still being substantially higher by the end of this year. And I think that there's going to be an argument that can be made that there's no other asset class that will even come close to outperforming crypto over the next 5 to 7 years. And then I also want to mention gold real quick. Someone had asked why the demand for gold increases when interest rates are being cut. And they referenced the Fed cutting 50 basis points. The easiest way to look at that is consumer spending, right? So when rates are lower, consumer spending increases. People can finance things easier and so on. And so naturally, the price or the demand for gold-related products, jewelry, things like that goes up. And so that's kind of the main reason. If you're looking at just how interest rate cuts affect gold, that would be kind of the main driver. But as it relates to crypto, I think for sure it's a solid asset class. And I've been on the same page with Hunter all along, except for right now we're arguing about it, the direction. And so hopefully I'm right and it goes up. But if he's right, he'll definitely be letting me know, I'm sure.
Yeah. I'm probably going to be bragging quite a bit, but it is a very controversial view right now to be bearish on crypto when everyone wants it to go up. And the caveat here I have to say is I still am technically a crypto holder. I still have some crypto. I've just sold the majority of it because I do believe exactly what you're saying. Bitcoin is going to do super, super well next year, I think, right? But I think the buying opportunity is sometime in spring, right? I think we've got about 6 months here, and I think that's going to be the most optimal buying time. But if I'm wrong, I'm just going to buy a little bit higher. And it's basically running a trade that's similar to this, where we just kind of sold our crypto right around here. And if we start seeing candles closing up here next week, that's great. That's all well and gravy. And if not, then I'm going to have a really awesome buy opportunity down here. And that's basically what I'm playing, right? Is based off of just the uncertainty of the FOMC and the rate cuts, and then also in conjunction with this terrible monthly chart. This is a terrible chart, right? And we don't have any tests back below here, right? So we are breaking back within. There are multiple untested zones, right? Let's draw these ones here. So you can imagine, how are you going to feel if you have no more crypto to buy? You have no more cash on hand to buy crypto when it comes down here. Because if you're sitting on here full on max leverage, full tilt on crypto, you're really, really going to be upset when 6 months down the line we're down here, right? And you can't buy any more because you've already max leveraged it. Right? So I've sold probably 90% of my crypto, and I'm either going to get back in here or I'm going to get back in here. And it's a really, really good opportunity, or a slight loss. Yeah. Emma, regarding a recession, do you think that the currency will be replaced by Bitcoin? You're asking Emma this question.
Interesting question. Mm-hmm.
Are you asking Emma this question? What do you think, Emma?
I mean, if they're asking me, I can answer that easily enough. I mean, I don't think there's ever a risk in that unless you're experiencing hyperinflation in a country. And even with hyperinflation in a country, a lot of countries' governments are not going to replace their currency with something like cryptocurrencies because they have no control over that currency whatsoever. We might see more adoption of it in the future, especially among certain countries where they're worried about their currency and they're worried about their economy and they want to tie it to something different. But for now, I don't think we're going to see a lot of that.
Excellent, Emma. Yeah, I think you hit the nail on the head there. To add to that, countries that do have hyperinflation, Venezuela was one of them, right? There's a couple others, and I think El Salvador pretty much too. They just use Bitcoin, right? And you're only going to be using cryptocurrency as your government-based fiat, basically, or your normal expenses, right? Like what people tend to use if your currency is completely devalued. And what is probably going to happen in the near future, probably within 10 years, is governments will develop their own digital fiat, right? And that's a really, really scary thing for some people if you're a security-based person, because now you have no means of anonymity, right? You can't hold cash anywhere and just be off-grid sort of thing. You can't be not tracked. Everything is going to be tracked on the blockchain and verified, right? And that's a little bit tricky coming into the new wave here. And I'm sure governments are going to want to do that for tax purposes, of course, because then you can for sure know how much people are spending and making. Bitcoin and the dollar will coexist. Yeah, totally. To add to that, Bitcoin is definitely not a currency for spending. Okay? It is a slow transfer. If you look at the current transfer times of Bitcoin, and we don't even have a very congested network, it takes more than a second, right? And that is a very, very long time. Sometimes it takes an hour, right? And if you go to your 7-Eleven or whatever, and you want to buy a banana, right? You're really going to wait there for an hour for your transfer to go through? It doesn't make any sense. Now that network is going to be even more congested. Bitcoin users are very, very small compared to the Visa network. So the only thing that is viable right now is to still use Visa network backed by Bitcoin. That's the only possible way that you can spend with Bitcoin on a contactless payment. Have you ever had a trading mishap that have made you laugh later? Ryan, I think you'd be better with this question.
Let me think about that. When I was at, everybody knows probably the firm, but the previous firm, when I was stress testing the system and things. And I also had a live trading account going with FTMO at the time, I believe. I literally I turned $200,000 into about $3 million in 45 days. That was a demo account, a test account, right? But for one of the days, I made like 20 or 30 grand, and I swear it was in my actual account, but I was actually trading it in the testing account. So I literally went to withdraw this $25,000, and there was no 25,000 because it was not in my actual trading account. So that was a pretty good size mishap, I would say. Lesson learned. And also, I would also state, it's a lot easier when you're doing a testing phase and it's not really your own money. So when I turned that money into that amount, that was because I was taking crazy trades that I would never normally do. So it's a kind of an unfair or unrealistic example, but that really did happen. So yeah.
That's really funny. Have you ever accidentally sent Bitcoin to the wrong address?
I have, actually. And you know what? Once you do that, you're screwed. So yeah, I did that with Bitcoin and Ethereum, actually. Fortunately, very small amounts. But yeah, in the Ethereum situation, I don't even know where the hell I got the address from. Like I couldn't find this address anything that I had, so I don't even know where it came from. But yeah, I've definitely done that. I think everybody's done that.
I've still yet to do it. I've been in crypto for 11 years. I'm
good.
very diligent looking at the. Maybe I'm quite lucky. And we have a number of clients that accidentally send us to the wrong address, or they send us way too much money. And that's always quite funny to, somebody comes into the ticket, says, hey, I sent you 10 grand by mistake. We have to refund it. It's quite, we all have a chuckle along those. What trading strategies do you believe are currently the most effective? So there's a couple different ways to do this. Ryan is an effective range-based trader, right? And range-based trading works well because it is the least risk, essentially, in terms of your R, right? So you can really target long profits compared to your stop loss. And if you just have a 50% win rate, which generally you can do if you manage your trades properly on a range-based trading strategy, you have to just make sure that you know what your range is defined as. Because if every single time there's a pullback and an uptrend, that's not a range. You're going to have to really define what is a range and be accurate with ranges, right? And Ryan's all right with that. I'm all right with trend trading, right? And when I get chopped up is when it ranges, right? So it's the exact opposite. So again, I have to define what is a trend, right? And what I do is I use higher time frames. Higher time frames really allow you to know for sure the bigger picture. And when you know the bigger picture, you can more easily know the trend, right? And one more thing to add to that is whichever one you do, what I've actually found is I have more success being loose with my entries, right? To not have static stop losses and entries and just kind of go off of a feel. And that's very, very difficult when you're a beginner. So you can't do it as a beginner, but as you get more advanced, I don't have set stop losses. I put really wide stop losses and then I close based off of the market data. And I only have the stop loss in place in case something goes crazy, right? Hello, Hunter. If a chair isn't available, can you sit on the sofa? The chair is, you can't see it. It's right here. All right, go sit. How's that?
We've got a lot.
There we go. So sorry, Hunter. There were way too many people asking about your chair.
What, do I normally sit?
A lot of comments on
I
that.
swear I stand all day. Do I just only sit for the podcast?
You do stand a lot. Honestly, guys, he likes to use his hands when he's explaining things, so it kind of makes more sense for him to be standing up.
Yeah, you pace around.
We need to get you one of those those walking desks, that.
Oh yeah, so you can just go on the treadmill and just walk the whole time.
Yeah, walk my peacock while we trade. Hey.
Yeah, exactly.
Which is more profitable, swing trading or day trading? Easy answer: swing trading. What do you think, Ryan?
100%. Yeah, that's 100%. Day trading is, I don't know. Swing trading, you give yourself a lot more of a chance. If you hit it at the right level and you have some time, I think all day long I would pick that strategy versus day trading. 100%.
I'll tell you why. Okay, number one, there's two reasons. Number one, you make fewer decisions, and you're less likely to be a spaz about it. And after having a loss or something, you're gonna fuck up the whole day, right? A lot of times, I wake up in the morning, I go for my training session, and it's early morning, and I mess up somehow, and I'm just full of anxiety for the next hour or two, right? And that's really gonna mess up the rest of your trades. Okay, so the next thing is, when you're looking at higher time frames, there are fewer levels above you, right? This is why I trade the monthly candles, and this is why I advocate all of you guys trade the monthly candles, because if you trade the monthly candles, there is nothing that's bigger than that. So you only need to look at the monthly candles, right? But if you're trading day trading, you have to look at the 5 minute, the 1 hour, the 4 hour, the weekly, and the monthly to know all the levels. And that's why day trading is more difficult, is because there's more things that you can fuck up. Question for everyone: what long-term changes? Should I put myself here? Boom. There you go. Like that better? No, I like this better. There we go. Okay. What long-term changes do you think trading firms might make after going through a deep recession to protect themselves from future economic downturns? What long-term changes do you think trading firms might make?
I mean, I can add to this as a general just companies and what they should do. like in a recession and stuff. I'm going to tell you actually what they shouldn't do from my perspective, being a marketer. A lot of companies, when we hit recessions, they immediately try to cut costs everywhere. And one of the things that they immediately cut costs on is stuff like marketing. And every firm that ever cuts costs on marketing comes out of it worse than firms that keep up their marketing costs. So that's what not to do. Long-term changes, though, I think people will just make sure that they're implementing proper risk management if they aren't already, which they should be.
To add to that, Emma, there's an added thing with the prop firms, which is quite interesting, is a lot of firms, when they were going through tough times, is they just cut payouts. They just stopped paying certain people, or they delayed payouts. And now that is the surefire way to go under, because now you got no reputation. And having a bad reputation is worse than not having marketing at all.
Very true.
There's a couple firms that went under and they tried to rehash, and there's no they're celebrating nothing now, right? You know, it's quite comical to see some of these firms that just destroyed themselves pretty much instantly for denying some payouts.
I think that the other thing I would add is there really is no long-term change if you're already not planning for things like a recession and you're running your business properly. You don't have the opportunity to make a long-term change because of what you just said. You know, these companies that just go under, they just go away. So this industry is no different than any other, and you have to plan and you have to budget and you have to be smart when times are good, so that you can sustain when times are not good, because it's a cycle. Every business, to think that it's always going to be solid every single month, there'll never be any noise or black swan events, is unrealistic. And so the firms that do preparation constantly, I mean, we're talking about this stuff every single week at our firm, and we continue to, and we always have, and we always will. And if anything like that does happen, we are so well prepared for it that I don't think a lot of places in the past have been in the situation where they were ready for the storm when it came, and they makes them reactive. And when you're reactive in any industry, especially one that's growing like our industry, and that can potentially be so volatile, it's a really bad thing. And it doesn't take much to really knock a firm, way off cycle.
Ryan, you said that you don't think that's any different than any other industry, and I get what you're saying, but I'd argue that prop firms are actually incredibly different. There is so many added difficulties, and guys, you might be quick to blame some of these firms that make mistakes and go under and whatnot, and it sucks, right? You mark them as a scam. It really does suck, but it is the most difficult industry in the world, I would argue, because you have seasonality to it, right? So in the winter months, December, January, the revenue goes down immediately, right? So you have to account for that while having delayed expenses, right? Your payouts are your largest expense, right, as the business, and having your expenses delayed is not something that any other industry has to deal with, right? What they do is other industries, they order the product, then they have the product, and then they sell it, right? So their expenses are already pre-allocated. They know what they've spent. In the prop firm world, you don't know what you've spent because it could be volatile based off of payouts, right? Payouts go up and down. That's why at Maven, we really, really push keeping our payouts steady, and there's not much variance, because then we can have a really accurate idea of what we're going to expend each month, right? And not many firms have implemented similar rules to us, right? And to have that variance and then the delay is a huge difficult hurdle to deal with. And then you've got seasonality, right? And then you've got these black swan events. So there's so much that can go wrong, and the reality is everyone operates this business as a regular business, and it's not. It is both trading and running a business and running, some sort of lottery sort of thing, right? It's all of them in one.
Yeah. I'm just gonna throw up a few fun questions before we get back into a more serious topic. So here's a fun one. I've got two more after.
I like it, Emma. Keeping them on their toes.
Yep. So we have one up now.
Oh, I thought you were gonna read it.
I can read it. If
be
your
a
trading
narrator.
account had a theme song, what would it be?
Hey, you know Young Gravy?
Yes.
Yeah.
Oh,
Yeah.
no.
What's Betty?
Okay.
Betty.
Yeah.
Betty by Young Gravy. You guys can play that in the background. That's my trading theme song.
All right.
What about you, Ryan?
Oh my gosh. You guys would be so shocked at the music I listen to. If I actually showed you my playlist, it would be my man card would be yanked immediately. So
Are you listening to
it's
Taylor
all
Swift
like,
in the
I have
background there?
like Whitney Houston and Luther Vandross and stuff. I'll just go. Let's just say American Badass because I live in America by Kid Rock. I'm gonna make it easy.
Emma, you got one?
Well, I don't really trade quite the same way you guys do. So, I mean, not really. I don't have a good option for this.
Yeah, there would be no theme song.
I mean, the joke would be crash and burn, but
There you go.
no,
If
I'm
you
doing
were a
okay
reality
there.
TV show, what would you name it? Oh man.
What about the prop firm space as well? The prop firm space is a little different than the trading space.
I think of like Shameless.
Oh, interesting.
Like all the different characters, you know?
Mm.
Or is it what's the one that's like I don't watch TV, man.
Yeah, I mean, we're thinking reality TV shows. I keep joking that we're gonna put
reality.
Hunter on The Bachelor. Like we're gonna do The Bachelor,
right.
Maven.
Yeah.
And he's apparently not into that. So
That's actually a really good idea.
yeah, we're gonna. Anyone who wants to go on a date with Hunter.
Stuck in a house together.
Anyway,
sorry.
Yeah, I was just gonna say the other one is what do we call people who trade with Maven? I mean, I just call them Mavens most of the time. Yeah,
me too. Yeah,
they're Mavens. They're part of the team.
Yeah, a Maven is already a superhero enough. A Maven is somebody. If you actually look at this, is how we chose the name for Maven. This is actually kind of funny. I just Googled synonyms for connoisseur because I remember this is a weird thing. I remember a photo that John took of me when I was like eating Jello at a all-you-can-eat buffet or something. I don't know why I'm remembering this. And he posted a photo of me eating Jello, and it looked funny. And he said Jello connoisseur. So the word connoisseur stuck in my mind with John. And connoisseur is like somebody who's an expert at something. So I was like, okay, trading connoisseurs, right? That sounds silly. Let's look up Google connoisseur synonyms, and Maven popped up. Like, that's perfect.
Yeah. This is an interesting question because it takes a dip away from trading for a bit, but more into like us as in a company as a whole. Do we have any expansion plans or goals for our company culture? Or
there are expansions that are happening that we can't discuss yet, but you will find out about them in probably Q1, I think, right?
Yeah, I'd say so. That's the goal. I mean, if it was earlier, then great. But
we've been working on some stuff, and as you know, Maven is risk adverse. We like stability. Right? It is a very unstable market, unstable industry. So we are the ones that are going to put things into place properly the first time. Okay, so we've been doing tons of work on this project where we could have just launched and. But reputation, Maven's reputation tells us that we have to do it perfectly the first time. Right? Yeah. So we'll do that. We've got some tech stuff, back-end dashboard stuff that's going to be coming out that I can tell you just loosely along those lines. We want to, can we say much about we can't say much about what we're going to be doing with the dash, can we?
No, not yet.
No, not yet. Sorry, guys.
Maybe someday, though.
There's cool stuff with the dash, and then there's another project too. Okay.
Yeah. There's always projects going on. Yeah. Regarding company culture, though, like company culture, I think a lot of companies like to try to plan out their company culture and say this is the way it's going to be and this is the way it's going to go. But company culture forms by itself. It's a matter of whoever we hire who fits with the team, and the team slowly adapts to new people, and culture kind of works its way around that. So
our culture is rather honest and argumentative, right? In like a good way. Like we argue with each other all the time. There's no sitting there just saying, yes, man, sort of thing. There's no boss. John's the CEO now, right? But we're all equals on the top, right? We all argue and we figure things out. And then every once in a while, somebody tells me, oh, you can't do that. I was like, oh, shoot. Okay. Okay, I understand.
Yeah.
And then we argue about it.
Yeah. And our other members of our team always offer feedback, right? And that's good. We need to hear feedback from other parts of the company, and we always take that into consideration. And a lot of your guys' feedback, when you're talking with our customer support team, it makes its way up to us. Trust us. We hear about it all. So
yeah,
I think the only thing I would add as it relates to culture is that, there's been two types of prop firms, and then there's us that's I consider to be like a hybrid mix. The first type has been very few, and it's just the kind of professional, stuffy, kind of like CPA-ish. And then there's the polar opposite that's you see on X or whatever, very unprofessional, Lamborghinis, that kind of stuff. I think that we're always trying to be that company that we want to be known as being innovative and fun, but yet ultra professional always as well. So I think that we've been that one company that's been able to accomplish a really nice hybrid mix of those two things.
Yeah.
And I think that our community has appreciated that, seeing the evolution as to how we've done that and how we continue to do that with simple things like consistency, like these spaces. I don't think there's any other firm that's consistently doing, something like this every single week and so on. So obviously, we're bantering. It's fun, but this is also a very professional thing. It's well thought out, and it's planned out and things like that. So I think we'll continue to follow that blueprint for the company. It's worked really well for us so far, and I think that it's probably the way of the future of a lot of the industry, of a lot of the top companies.
I don't think you could be more fun and still be professional than what we're doing. I don't think you could be more engaging in the community and still show your real personality and be professional. You know what I mean? Smaller firms, they might be able to just be kind of kids and play around, but they're not taking the game seriously.
Just because we're talking about company culture as well, we've had a lot of comments about job vacancies and if we take applications and stuff. We do take applications. If you guys want to reach out through Discord or through our web chat and provide your information to our team. Our teams stick around. So we don't often have a lot of job vacancies. We will as we grow, and we do get them occasionally, but we don't really have a lot of people leaving. So we're not usually trying to fill those positions because they like to stay, which is great.
I think I can only count maybe 2 people that have ever left.
And
we have a staff of, if you count all departments and part-time people, we're probably pushing near 40 people.
I think we more than that now, I think. Yeah. So
right on. Yeah, I don't even know some of the new hires now.
You'll get to know them as we go.
Exactly. Yeah. Right, let's get a couple more questions. We can do maybe, Emma, you said if there's a good serious one, we can do that and then sort of wrap it up, yeah?
I'm just scrolling on through. By the way, guys, because you were asking about 3 people running Maven, Chris, Seb, and John, kind of, especially Chris and Seb, were really the founders of it. Yeah. And Ryan and I are newer add-ons. I've been here a year. So...
Yeah.
Okay, so this one might be a good one to talk about. Of course, it's freezing right when I'm trying to do it. Okay, I will just read this out loud because it doesn't seem to want to be popping up. Someone's asking about how we kind of measure trader performance over the long term and how we value consistency among our traders.
So interesting. So how do we measure the trader's performance over the long term? I'm assuming you're asking this question based off of the mantra that you think that they're going to be copied onto live markets directly, right? And because we don't actually care what your performance is. In essence. If you're a really good trader, all well and good. I love it. More power to you. We're not monitoring every single trader. That is an insane amount of work. We would need hundreds of staff to be able to check traders or some sort of AI algorithm that would be crazy expensive and take a lot of time in order to build out. What's better is to create systems that allow us to lower our risk from trade data. So we can have overall trade data and we can use that for our advantage. And that we don't care what the performance of an individual trader is because it is a global set of data. The next part of the question is, how do they value consistency and ability to handle psychology pressure over the short-term profits? Again, the only thing with consistency is if you're not a consistent trader, there may be deductions to your payout. If you take, for example, one all Hail Mary bet, you're not getting paid out $100,000 in 1 week. I'll just tell you that right now. There are limits to what you can place for a individual massive profit, and you can check those out on the FAQ. It's nothing too extreme.
So we have a new one up, which is asking about innovations or technological advancements that we think will have the biggest impact on the future of Forex trading. I mean, I guess this is kind of a little bit more of a John question. You guys were asking where John and Seb are. They are around. They are just working away right now to a few other things. So
yeah, John and Seb are the most critical for day-to-day operations, right? And that's why they're generally not in here, but every once in a while we bring them on. Do you believe so? Yeah, I believe the biggest impact for the future is trigger, and how are you preparing for these changes? There's the big ones that stand out are AI algorithm trading, which in my opinion is completely meaningless, and there's no need to prepare for it because there are already algorithms, there's already machine learning, there's already quanting that is going on behind the scenes, and that's nothing new for these massive firms. So unless you're going to say, hey, the average Joe is just going to make a quant algorithm that's going to make them billions of dollars, it's not going to happen. So that's not going to affect the market in any way. Creating new bots, it's the same sort of idea that a trader might use a bot. Bots don't work. They just don't work. They don't change the market in any way. They're not going to make you money. And if they did make you money, you can go ahead and sell it for $1 billion instead of using it right to Goldman Sachs. Do we even have any plans for expansion? Didn't we already answer this, Emma?
Not entirely. They're asking about offices here and stuff, and I just wanted to point out the fact that we are all digital. We have no intention of opening up an office that's in a set space. We're all over the world. Like even the three of us, we're all different time zones.
Well, there is that one thing. If we little vacation house.
Anyway,
I'm kidding, guys.
I want to expand on this though. We're virtual. I mean, there's really no reason to have physical office space, and by doing that, we're able to, even with the rest of our team, assemble the best of the best for each position because we have the whole world to choose from, as opposed to one area. If you constrain it to one area, then you just have that area to choose from regarding your talent. Our talent's kind of like a melting pot of talent. As it relates to new markets, we're constantly reviewing data, and there are definitely markets that are not historically large prop trading markets that we are looking to expand into, as well as a slew of other demographics that aren't typically thought of as it relates to prop firms. So we are constantly always looking to further develop into those markets or demographics and things. And I think you'll see a lot of prop firms trying to do that as well. It's smart business and things. This industry has been so constrained on one kind of group or subset of traders. And the more it becomes more of a household name and a stable industry, it's going to appeal to a much broader demographic than it currently has in the past. And that's when the professionalism and things come into play. So yeah, we're always looking and analyzing and talking about developing and moving into new markets and attracting new traders.
Mm-hmm. Emma, finish us off with one last question, or should we wrap up?
I mean, I don't really see a good wrap-up question here. Sorry. I'm just
All
scrolling
right.
through.
That's
Unfortunately,
perfectly
my
fine.
internet connection's being a little buggy right now,
Yeah.
so I'm seeing some of this stuff come through late, and
Let's
it's
cut it off
just
then.
okay.
All right, guys. So that was our. Let's get rid of you. Put it on me. Okay. So thanks for watching, guys. Every single Tuesday, 9:30 a.m. Pacific time. Now that is going to be 4:30 UTC every single Tuesday. We're doing a giveaway. Emma, why don't you tell us how people win the $50,000 giveaway?
Yeah, so I have selected someone from the comments who was asking questions, and I am going to be popping it up in our YouTube stream this week, just because that's where most of our traders are. And then you just pop into our Discord and claim it. I will let them know which person won. So.
Okay, guys, join us next week. We will be jumping into interactive content. We're going to be working alongside with you to develop systems that are going to help improve your trading. All of October, 5 weeks in a row, we're going to be starting off with back testing. I'm going to show you live how you should be back testing. The following week, we're going to get a special guest speaker to do some psychology engaging content with you. And then we've got a couple more ideas, so tune into those and keep track of the Maven social medias there. Thanks for watching, guys. I'll see you next week.